Hi everyone, today we'll start with the next topic of partnership. In the previous video we did a partnership definition as well as the features of partnership. Today we are going to start with merits and demerits of partnership. Starting with the first point, merits of partnership, we talk about ease of formation and closure. If you remember, when in the previous video we talked about that anything which is lawful and has profit and comes under Partnership Act of 1932 is a partnership firm where two people come together to pool their resources with mutual agency. So this kind of definition makes it easier for business to form. Here it can be formed very easily, agreement between partners to share profit and losses, of course, and no compulsion of registration. Now what exactly do we mean by registration? For any business to start, if you have seen, sometimes R and like this is written on some of the products which are registered, properly registered firms. Now partnership firm, it is not compulsory for partnership firm to be registered. If it is registered, there are some benefits that we'll do in the next video. There are some benefits, but it is not compulsory for a partnership firm to be registered. It has to be legal, that is lawful, and it has to be, all things have to be for the profit motive. So it can be formed easily, agreement between partners to share profit and losses, no compulsion of registration, and closure is also very easy. You can close, you can terminate the partnership in case one of the partner walks away from the partnership agreement. Okay. Next, balanced decision making. Since all the partners who are there could be two partners or more than two partners, whosoever has a particular kind of competence and skill in particular thing, that person can handle that particular part of the business, and the decision making is with the mutual consent, so it becomes easier to take all kind of decisions in a partnership firm. Partners can oversee different functions according to their areas of expertise. Like I told you, whatever you're competent in, this reduces burden also and leads to fewer errors, and people who qualify in particular thing, they can take over. Like for example, if there are four partners, A, B, C, D, A can look after the production, B can look after the finances, C can look after the marketing and sales. So it depends upon how, and D can be another kind of partner who can look after the overall management of the firm. So all people can look after the firm in as per their area of expertise. Next, more funds. Since it's pooling of resources, it's pooling of expertise, the moment the pooling is done, the partnership firm can generate more funds in comparison to sole proprietorship. Capital is contributed by a number of partners, so large amount can be raised as funds. Like I told you already, that more funds can be generated. Next merit is sharing of risk. Yes, all partners, they share the profit as well as losses. So like in sole proprietorship, there was no sharing of risk. One person only was handling all the kind of business. Here the risk gets shared between the partners or amongst the partners. The risk is shared by all the partners. This reduces anxiety, burden and stress. Here it is stress in individual partners. Yes, it reduces the stress in individual partners. Why? Because otherwise, if a sole proprietor is there, he knows that he has the burden of all decision making, and in case he takes one decision and if it goes wrong, there could be losses into the business, and moreover they cannot generate much funds from the banks. Also, banks are not very ready to lend them. So here that sharing of risk reduces the anxiety, as well as the partner it becomes easier for the partners to work on the it becomes easier for the partners to work in day-to-day business activities. All right. Next is secrecy. This is C out here, secrecy. A partnership firm is not required to publish its accounts. Even the sole proprietorship firm is not required. Yes, in case if your firm is registered, then in that case you have to be very cautious about what things you are doing. But if it is not registered, there is no need for you to publish the account. Only usually joint stock company has to publish its account, and that also it has to for the income tax for the tax benefit, or for the tax purposes is the right word, right? So I'm talking about secrecy. A partnership firm is not required to publish its accounts and submit its report. There is no need. Only a joint stock company does that. That is, they submit their report and they show their accounts. And moreover, hence it is able to maintain confidentiality of information. See, if there are four partners or two partners or three partners, they would not like to share their trade secret with anybody else. So the confidentiality of information in terms of the firm product manufacturing as well as in terms of the finances is properly maintained. Next we come to the limitations. What are the limitations? First is unlimited liability. Partners share unlimited liability. Why? Because to pay off the debts of the business, even the personal property is liable. In the feature of partnership, we talked about that the liability of partners is joint and individual. The same thing, joint and several. Joint and several means what? If there are 4 partners and one partner is unable to pay at that time to a creditor whom we owe money, at that time the other partner can pay on his behalf, but later on he has to pay to the partners his share of money. So partners are liable to repay debts even from their personal resources in case business assets are not sufficient. So in case business assets are not sufficient, they whichever way it is, they have to make the they have to clear off their liabilities. The liability of partner is both joint and several. Like I told you, joint and individual as well as several. It's spread over all the people. Partners with more wealth sometimes suffer due to this. Yeah, because those who have more wealth, they sometimes pay on behalf of the other partner, but the other partner may not be able to give back that money. So that poses a threat for the person with more wealth, but otherwise they contribute, the amount of money is contributed by them as capital. They share profits and losses accordingly, and things are worked in proper ratio. So usually there's a partnership deed which is signed properly. All things are mentioned out there. Nobody can challenge each other. So it's better that the liability part is clear with all the partners. Next, limited resources. Ultimately, whatever pool is coming with all the partners, that much resources are there in the partnership firm. Beyond that, they can borrow money from banks or any other financial institution. Again, that becomes a burden on the partnership firm because they have to pay the interest and all other whatever is required to pay on the loan which they are borrowing. So that also has to be kept in mind while borrowing from outside. Resources are limited. The amount of pool the partners can give, that much of money is contributed. There is a restriction on the number of partners, so capital contributed may not be sufficient. Sometimes I told you borrow from outside. Therefore, partnership firm faces problem of expansion at times, not always, but at times yes. Partnership firm is not as big as a joint stock company. That is much bigger a prospects. That has much larger prospect. So in that case, this limited resources poses a problem for a partnership firm. Possibility of conflicts. Since there are 4 partners or maybe 2 partners, when person is individual, he takes his own decision, he does no interference from other people, it's easier to work. And in case if you have some worker who is unnecessarily bothering you, you may throw out that person out of job, that's okay. But when you're partners and you have to listen to all, mutual agency is there, one for all for one, and sometimes things may not tally, you may not agree with other person. So when in case of disagreement, there can be a possibility of conflicts, and when there are conflicts, it may lead to a problem to your partnership firm. Partnership is run by a group of persons wherein decision making authority is shared. So people share their decision making authority. Difference in opinion on some issues may lead to disputes. लड़ाइयाँ हो सकती है. There's a chances between the partners. Moreover, decision of one partner is binding on other partner. ये हमने करा हुआ है already. Mutual agency वाला word हमने किया हुआ है. Same चीज़. One unwise decision by some may result in financial ruin of the business or the partnership firm. It may also result in termination. Termination मतलब क्या होता है? End of the partnership firm. Discontinuance of the partnership firm. Lack of continuity. Lack of continuity, partnership usually comes to an end with the mutual consent of all other partners. Suppose there are 3 partners and one of the partner dies. The other 2 leftover partners, if they wish to continue, they can continue the partnership firm. But if they don't wish to continue, they can terminate it, but with the mutual consent. In case the person who has died, his widow wants to take over and come and join the partnership firm, she can also do that. So all that is done with the mutual consent of all the partners. Partnership comes to an end with the death, retirement, insolvency, lunacy. Lunacy मतलब पागलपंती of the partner. It may result in lack of continuity. हो सकता है. However, remaining partners can enter into fresh agreement and continue to run the business. So like I told you, they can continue the business if they wish to. Last point of limitation, it's lack of public confidence. See, here we wrote that the partners maintain a secrecy, right? They don't publish their account. Now this sometimes becomes a problem since people outside do not know what's happening in the partnership firm and what kind of partners are there, and whether the partnership firm is doing financially well or not. People are not ready to lend them money. One, sometimes people become deceptive about whether to actually buy products from them or not, or suppliers sometimes become very cautious whether to give them goods on credit or not. So that kind of thing becomes a little problematic for the partnership firm. How? Partnership firm is not legally required to publish its financial reports. They don't, and they don't. Nobody will go on, announcing that our partnership firm is under financial ruin, or we are about to wind up the partnership firm. Nobody declares such kind of things or make any other information public, so they don't make it. So it is difficult to know the true financial position. पता नहीं चलती है. So therefore, usually the confidence of people is low. The public does not trust the partnership firm to the extent, until unless they've really made a name for themselves and they've been there, established firm for years all along. Sometimes established firms also fail, but usually public has lesser confidence in the partnership firm. Next topic we are going to do is partnership deed.